Tuesday, October 31st. Market analysis, Stan Ehrlich, good morning. Almost 10 o'clock California time. You know I start out with the indexes, and we've got some interesting situations at the moment. The October lows at this point seem to have been Friday. It was oversold. You're looking at the Christmas E-mini futures contract, and the best I can say is we do not have a bullish engulfing except on the Russell 2000, but we'll get to that in a few minutes. And it was oversold, and in some cases in support areas, and around, in some cases, Fibonacci retracements of around 32 to 50%. So a variety of reasons, not the best ones. I'd love to have another bullish engulfing green, and I do have a few more days to have one of those, but it may not be at a lower low. Like that one, it was a little higher than 2 days earlier, October 4th, and I did think that was going to be the October low at the time. It did go up another day or two or three or four, and then we turned down until Friday. October 27th is my pick at the moment, and if it's correct, we will see higher highs, we'll see higher closings, we'll see bearish engulfings or bearish signals of some sort or another that will fail, and you'll make new highs for the rally. This will all take place in the next week or two or three. Remember, we do have the Santa Claus rally coming up, I want to mention. And in November, which is starting tomorrow, I'll start to talk about that in great detail. We've got a hell of a great track record for that Santa Claus rally, like the October lows. We'll see about this October low. So anyway, next chart. By the way, some resistance we're going to have on the Christmas E-mini at around 42.42, and we'll tackle it when it gets there, which could be pretty quick. Next chart. And here we go. So on the spider, we came down to the bottom of the support area on Friday in oversold condition, and after poking through a little bit, it closed back inside, and that was one indication it was going to start to rally some. The oversold at the bottom of support. So it did yesterday, and we've got some follow through today. We have a little bit of a barrier I'll show you in a moment to overcome, and I think it could happen very soon. Maybe while I'm recording, an alarm will go off and we'll be notified to take a peek. But we're almost high and last right now on the S&P Spider 500, and of course the other ones affiliated. Look at the 1 minute S&P SPY index. We are above the high of earlier this morning, attacking a high of only approximately 15 minutes ago. This little red line, which I don't have the price that it's at the moment. I think it's let's call it 417, and we're at 1680, so extremely close. Is a vestige of resistance, but we have spent a few times banging away at it yesterday and today, and we're just plain old every day getting closer by the minute. So when that alarm goes off, I forgot what I set for the alarm, but anyway, we will be at a spot where the rally could start to accelerate upwards more. I'd love that. Next chart. NASDAQ, Christmas futures, oversold conditions. We looked bearish for a couple of days here, but it's starting to act a little bit better. I need to close above yesterday's high, and that's when that alarm's going to start going off on the spider, and that's going to be back into the old wedge or downward slanting pennant, and then we're going to be challenging the major bear trend line after that in a week or two, in my opinion. You know I'm bullish. I'm looking for the October lows. I think the bull market is not over yet. That started October 13th of last year. All right, next chart. QQQs. Same thing as the NASDAQ, of course, futures. We broke out of a pennant. We were oversold. That's not unusual at the time. And it came back up to the resistance, which was right smack at the trend line at the high of the day yesterday. And here we are going up and challenging it again. So if we get back into this formation, That's kind of a little bit of a no man's land. And I definitely would expect it to challenge the top. And of course, later on, I don't know, January, December, break through it and keep on going. Next, this is the DIA. And I just have support oversold, starting to rally already, getting back up into some resistance and not stopping at what I would have expected to be resistance, which would have been 328.5. And that was yesterday. So it's continuing a little bit more today. I like what I see. Next, we're looking at the Russell 2000. We have made new lows just in the last couple of days for 3 years. Now, this is a daily vertical bar chart, and I'm showing you data all the way back to approximately July of 2015. Starting around January of 2018, this approximate price level, it's not exact, it's a support and resistance zone, stopped a lot of rallies on the way up and a little support on the way down, but proved to be over years very significant until finally it blew away from it in 2020, 21, 2020, December 21 topped out, beginning of the bear market, and then all the way down to about that same price level again. We're looking at the summer of 22, bounced off it again and again, and guess where we're at? Hey, my alarm went off. Excellent, going back to that chart. All right, so we're here. We're up 136 on the spider at the moment at 416.95, call it 417. We'll see what happens. You can always see this quote in the upper left-hand corner, regardless of what chart I'm showing. And I'm going to just simply erase it. Well, I'll raise the line up a little bit, so it might go off way up there. So I reset it in effect at a significantly higher level, but I wouldn't be surprised. Going back, sorry about that. Let's just look. Oh, I wanted to show you the Russell real quick. This is very profound long-term. I have to repeat myself, a very profound long-term for the Russell 2000. This support level, I don't remember seeing anything quite like this. It's not that big, it's not that small. It's got 2 or 3 different spots that have been very important over many years, 4 or 5 years, and from above and below. So we are now having, in the last couple of days, a test of this support in oversold condition. I had a buy signal, didn't work that would be Thursday of last week, I believe. Yep. And I mentioned periodically that these come in clusters sometimes. So I might get another in the next few days, I hope, or any of these indexes. I've spent a chunk of time on this commentary because there's a good chance that Friday was it, the October lows, and we're going to be going up for weeks. October low chart real quick. I have shown you this chart for 2 months, 3 months. I got into the zone, so to speak. We got down to 409 and small change. My objective was 407.50 down to 406. I came close as far as the downside price objective, but way off for the timing of it. I was hoping for the middle of October for a variety of reasons, not that it was the middle. And okay, yeah, price was not bad if I'm right about Friday being the October lows. Remains to be seen. We're still only, 416.93. It's not jumping like crazy, is it? Okay, commodity futures. E-mini from a different perspective. Support area tested. And by the way, the E-mini's head and shoulder top, and this is a continuation contract, with the shoulder having been in June, middle of June, and the head, we had a bearish engulfing at the top of the market to the exact day. We also had a bullish engulfing at the bottom of the market to the exact day. That's October 13th to 22. And for the top, July 27, 23. Now, all the way down from there to where we are Friday, it looks good. I just haven't gotten that bullish engulfing, which I'd love to get. And we've been spoiled. We got two of them fantastic on the exact turning day. But next chart. I'm spending too much time on this. NASDAQ, I've mentioned everything I want to. Next, interest rate futures are close to making a new high for a couple of weeks. We have a bullish engulfing on the bottom. We have a retracement within 3 days to get our ER3 trades long, which we did. And we are now starting to see some significant progress to the upside. Also on the 10-year notes, same thing. We got almost the bottom day on the bonds. It was the low day on the 10-year notes. It was only a touch above the lowest low 2 days earlier in oversold condition. So I like what I see with interest rate futures. Stronger the better, the quicker here. Next, crude. In support. Looks like it's going to start to break into modest new lows for a week and a half-ish. But a lowest low for a month plus, month or two, is not far away. And it had tested the support area low already. So the next time down there, we may not be oversold. We got a lot of elbow room here. And before we get into an oversold situation, I think it's going to break that low at 79.97-ish. And that's going to trigger off another stair-stepping situation down again. Next, natural gas. Yeah, a bit of a surprise. This is a big bullish engulfing, not obviously green because we were oversold within the previous number of allotted time frames. We were at the bottom, but this looks like it's now going to pop up even more. You can see our last trade due to an ER sell signal worked great. We took a very large percentage of this big swing to the downside out of the market, and we're now flat for the moment. Not sure what to make of this. I'm not going to go gung-ho about being bullish or anything. Let's see what happens the next day or two. Okay, heating oil. Well, we've dipped down and then started to come up a little bit today. It's got some resistance above. This is also a little ambiguous to me. I really don't want to go out on a limb here. I have been talking about a possible top forming. These could be two little shoulders over here on the left. The top of the market is obviously the top. And the correlation is that this little rally high here could be the first shoulder to another one to the right somewhere in the week or two to come. Somewhere around 3.086 or so. And if that's going to happen and it turns down, that I will start screaming bloody murder about a double shoulder head and shoulder top. But in the meantime, I'll wait. Gold has a brand new ER sell signal, red engulfing in overbought condition. Get short signal, period. This bull move from our buy signal on the bottom day, October 6th, produced a larger rally than I had expected in the first place. And now we went all the way up almost to that major resistance blue zone here. And now, bang, we're getting hit over the head with a bearish engulfing sell signal. I am officially turning bearish in gold. We've been overbought. I keep mentioning it for a long time, and very much so, and a very high levels, 85. So here it is, finally. Go short. Next, silver. I got a sell signal 4 days ago, didn't work. 3 days ago, didn't work. We got overbought at the high of the rally and challenged it, but couldn't make any new highs. It's sort of a resistance area. Yeah, it's kind of broad, but I think this is turning down with gold. What about platinum? Here we are, ladies and gentlemen. We're overbought conditions in platinum. It's going to turn down also. All three of them, all three precious metals. So we should be challenging the 887 ballpark area pretty soon on platinum. Next, high-grade copper. Punched through a little bit of resistance, but couldn't stay there on a closing basis yesterday. Closing right at the top of the resistance area after getting well above it. Not a particularly good, strong sign on the close. Today, we're dribbling down a little bit more, slightly lower on the day. Nothing all that interesting about what's happening, except a little bit lower low and a little bit lower current quote. And the high is also lower than yesterday, quite a bit. I think we're starting our way down to new lows. I think we're just now starting to go down to a new low for many months. Next, soybeans have some similarities here. Last couple of rallies have failed to make a new high. We got the top of the soybean market almost to the exact day and very close to the highest highs, and a red ER sell signal that produced a hell of a break real quick. The rally got overbought on a little gap up for an exhaustion gap, and kaboom, to new low ground. So that's a second lower low over 2 or 3 months. Bullish engulfing, ER buy signal at the bottom, of course, and a little rally, not that big a one. And here we are stuck in the middle. Support is below us, and it has been holding, and resistance is not that big a deal. You know, this support area is much more profound longer term than the resistance above, but we're a little bit, ambiguous about happening. I think I've been waffling back and forth here a little bit, but my signals, they've been really good. Next, we're still short soybean oil from the top of the market. On the second, I should say the second high in a broad double top. Great place to go short. Dropped off, kept dropping. Our trailing stop, which is the yellow line, and it's not a percentage or a dollar amount. It is a combination of factors, including relative strength readings and so on. So we just missed getting bumped out. And obviously, this is a position trade, a longer term trade. My minimum downside objective, because of the head and shoulder top, and there's the first shoulder on the left. This is the double top, which is the head of the formation, and the right shoulder, all have been working just great. Very minor, tricky situations, only a little bit here on October 2nd and 3rd. The rest of it's just pretty much clear cut. A little bit a couple of days earlier. So I'm expecting to see 50 and probably lower. Let's see if we can stay short for another week or 2 or 3 or 4. Next chart, meal. Resistance stopped at cold turkey and overbought conditions, dropped off sharply yesterday, and today is bouncing back a little bit. I want to see it start to make lower lows in the last 4 or 5 days on a closing basis before I get more bearish. But because of the extended overbought and stopping at resistance, I got to be looking south. So I'm starting to turn negative, south, bearish, and let's see what happens. Not too many more comments than that. Except if I'm right about this turning point, I think we're going to easily come down to the bull trend line, which I have a hard time not mentioning. Looks like a neckline, sort of. But let's see what happens. It's a long ways down already. Next, we've got corn. I'm telling you, I think it's going to go by the way of wheat. We just have a little tiny bit of support here at the lows of the last few days. It's just slow moving. Let's see if it can start to break into new low ground, and that should be this week. Next, wheat, new lows for a couple of weeks, getting closer to making a new low for longer term. I still think it's going to work its way lower. Next, live cattle, oversold, bounced up, really nice. Here's an unusual place for a bullish engulfing ER buy signal. Officially, I have to be bullish. And as long as it closes above yesterday's close, I'm noticing it's just barely higher on the day at the moment. But all the ingredients are here. So at this tick, it is an outside up day bullish engulfing, and it just went down a tick. So if it closes equal to or below yesterday's close, we will not get a bullish signal. At the moment, it's just borderline. Next chart. Hogs at the bottom, or almost the bottom. We got a bullish engulfing. Great. Up 1 day, 2 day, 3 day, 4 days now in a row. Up to and through resistance. Now climbing into another air resistance. I think it's going to get up to 72.60 easily and quickly. This whole mess up here from 78, from 72 up to 78 could cause a bunch of problems, especially since we're already relatively close to overbought. So we're probably not too far away from topping out. I gotta say, what, another $2, $3, $4 at the most? Next chart. OJ has finally screamed bloody murder, sell the hell out of me. This is a huge, assuming the data is correct. There's a possibility that it's got bad data. I don't see any evidence of that. This is exactly, and I'm hoping everything is true. And I could draw a 1 minute chart and, verify that it did swing all the way up there and then all the way back down and so on. But I trust the data. You've got to. And this is a gigantic bearish engulfing ER sell signal in overbought conditions, way up on the RSI scale of around 91.5. Actually, this is very similar and even bigger than what we had back on July 31st, which caused a few days down. Pretty good break. This one, if it works correctly, should easily and quickly cause it to come back to 371-ish. Yep. And I'm telling you, this size, and it could make even new lows here soon, of a reversal, looks to me like it could be the top of the market because of the parabolic way it has been going up. A long, long, long time to come. I hate to say it, but years. All right. That one's I don't normally talk about long-term signals like that, but this is the idealistic combination of circumstances to have one. Wow. Okay. Put my neck out on that one. Next one is overbought conditions. It's just dribbling out of overbought conditions. It's probably going to hold when we come back into support. By the way, this gigantic reversal in cocoa on 8/7, the 7th of August, is similar to what we're having right now in orange juice. Very similar. Now, that did not turn out, obviously, retrospect 2020 hindsight, to be the top of the market, but it did have a very big crashing day the next day, and that wouldn't surprise me in orange juice. Next, bearish engulfing at the top of the rally in coffee, slipped off for a few days, and this rally is more than I would have expected. So we're out of all our shorts. It did hold plenty of opportunity to make money on the ER1s and the ER3s. That's it. I'm going to go neutral. Let's see how strong this can get and whether it tops out again. Very touchy situation. Next chart is sugar to sweet. Here we go. Doji inside trading range today, just doing nothing. It looks like this double top may be the dominant feature here. Need to see a little bit more weakness before I'm encouraged that it's going to break down to all the way to 25.20 and then start to drop into this support area that it's been into a few times this year. Why not again? Next, caught in the rag. Got a breakdown. Major resistance, stopped it in overbought conditions. Double topped out. Unfortunately, we only had one bearish signal at the beginning of the top formation, not at the highest high. That's too bad. We got a buy signal that was at the bottom of that fantastic break and straight up move. Yeah, but it was a while back, July of 22. So this is going to break down in a new low ground and probably come down to 77.25 very quickly. Next, E-mini again. Let's check on a 1700. We are staying firm, but not accelerating, kind of like I expected. Give me 1 second here. I'm going to go back and look at the 1 minute chart for the spider before we say goodbye for the day. And this is the 1 minute chart for the spider. That's when my alarm went off a little while ago. It dipped back into support and is coming back up very, very close to the high of the day. I think, like I said before, this rally could start to accelerate. You guys have a great day. Profitable trading to you.